Alright, so let's start the next topic, which is the silver bullet. Market maker models are swing points. So over here we've got a depiction of a swing high, right? So think about the previous lessons as well. Think about those buy stops resting above an old high and those sell stops below an old low. We want to take out those buy stops first, right, to pair them up with the sell stops. Now importantly, in a swing high we want that second candle to close inside the range to focus afterwards on that third candle being an expansion lower to go into those sell stops of that candle's range, right? So we want to pair up the buy stops with the sell stops, and again, important, the second candle needs to close inside of the range. Now this third candle takes out the sell side liquidity already, but if it does not, we can still focus on the fourth day, which should also be an expansion lower. So the third day will be most of the time a classic sell day after that second candle closes inside of the range. So let's head over some examples. We've got a GBP CAD weekly chart over here. As always, I keep repeating it, but it's very important. You need to mark out your premium and discount of the range, right? So we have this range low over here and a range high up here. So what are we going to be focusing on? Again, think about external range and internal range liquidity, right? So we're going to see where the sell stops are taken and where the buy stops are taken. So first of all, we've got that weekly swing low external range liquidity rate down here, right? So we've got us closing inside this range, and then we also have a weekly fair value gap here. So we go from external back to internal range over here. Now going into the daily time frame, we want to be waiting for that swing, right? We want to have that second candle take out the low and then closing inside of the range. So again, we've got that SMT, we've got that weekly external range liquidity as well, which has been purged over here, and now we want to go from external into internal range liquidity, and we're going to focus on the swing over here. You can see one candle higher, one candle lower, and then the third candle is higher as well. So we have that 1, 2, and then we want to focus on the third day. So let's zoom in a little bit more. We've got that GBP CAD daily chart, right? Again, think about the previous lesson about order pairing, right? We want to pair up the sell stops with the buy stops. Again, we want to focus on that second candle closing inside, right? We need that candle to close inside of the range. So we purge those sell stops, and now we want to be focusing on the third candle, which is highly likely to be an open low and then a high and a close, right? So that would be a classic buy day going for those buy stops. Now we can dive into the 15-minute chart, and this is what we mean by market maker models are swing points, right? We see a clear sell side of the curve over here and an original consolidation of a market maker model. So this is sell side of the curve, and remember, this is day number 2, right? The second candle in the swing low, which takes out sell side liquidity, which is the start of buy side of the curve, where this is where the smart money reversal happens. So after that smart money reversal happens, right, we want to focus on day number 3, which is either first stage and or second stage of accumulation for buy side of the curve. So importantly, right, we wait for the second candle to close inside of the range, and then we focus on the third day. Now what do we map out? As always, New York midnight opening price, right? We want to be a buyer below daily opening price. And think about order pairing again. We want to pair up sell stops with buy stops, right? So we're going to be mapping out premium and discount first of all. See where there is a short-term low in discount, which we can rate to do some order pairing. And if I outline this line over here, we've got a 15-minute stop hunt over here, right? So the third day, this would be the open low and then purging liquidity and then continuation up higher, completing that market maker buy model. Essentially first candle, second candle for the smart money reversal, and then the third candle for redistribution or reaccumulation. Now where would you get in on that third day? If you did not have an order below an old low, that would be a turtle soup, right? You can also trade the PDRA matrix, right? If you see this as low of the day, we have a breaker, etc. You can take whatever you wanna do. You can go into the 1 minute and see if there's an opportunity in here, because low of the day should already be set over here in that swing point. Right, so for another example, we've got Euro USD daily chart, we've got SMT on the highs, right, important, and then we have a higher time frame key level. So that's where you want those swing points to form, right? It makes it higher probable that we're going to move away from a higher time frame key level. So where does the swing point occur? Right, we've got candle number 1 over here, and then we have candle number 2 raiding the high of candle number 1 into that higher time frame key level. Now what is important after we take those buy stops and we want to target those sell stops, right? The order pairing, once again, it is important that candle number 2 must close inside of this range. That is a must. And then we can focus on the third day, which is this candle over here, taking out those sell stop in the end. So let's dive in to a lower time frame and see what that looks like. So we trade candle number 3. We want to be targeting the previous daily low first of all, right? That is target number 1, and then the candle's range low of where the swing point occurred, that is target number 2. So over here we're diving into the lower time frame, right? We've got a 15-minute chart. As always, look for that range high and the range low, right? First day, and then the second day is the smart money reversal in that higher time frame key level, and from there on out we can start to look for opportunities. So the third day is actually this day over here. So we got a market maker sell model going on, right? How likely would it be that you would catch an entry in this example? And that's why we put this example here as well. Sometimes you won't get an entry and the swing point will already complete the market maker model very quickly, so that is fine as well. We trade the probabilities, but we really need to focus on that third candle in the swing point, right? So if you want to complete the market maker sell model, probably no entry. Could be on the lower time frame, maybe on the 1 minute you can find an entry here, but those are just the probabilities. Right, so now let's dive into time frame alignment for SMT and our continuation purchase, and then how to take an entry. We've got 4 models over here, 4 swing models. We've got a monthly swing model, and we're going to be looking for 4-hour SMT or continuation purge, and then 4-hour or a 1-hour change in the state of delivery order block, or 50 to 62% retracement level. Then we've got a weekly swing model, a 1-hour SMT we're going to be looking for, and or continuation purchase, and then a 1-hour or 15-minute change in the state of delivery order block, or 50 to 62% retracement level. Thirdly, we've got a daily swing model, so then we're going to be looking for 15-minute SMT and or continuation purchase, and then 15-minute and or 5-minute change in the state of delivery order block, or the 50 to 62% retracement. And lastly, we've got the 4-hour swing model or previous session high run into a 5-minute SMT and or continuation purchase, and then we're going to be looking for a 5-minute change in the state of delivery order block, or the 50 to 62% retracement level. So firstly, let's start with the monthly swing model into the 4-hour SMT continuation purchase. We've got a DXY monthly chart over here, so let's outline the premium and discount, right? The premium up here and the discount here. We've got that key level outlined. We're going to be focusing on that swing, right? We've got the first candle over here, second candle takes out the low and closes inside of the range. That is important. Again, we need the second candle to close inside of the range. Then the third candle, we're going to be focusing on purging the high of that first candle. So if we dive into the daily time frame, it looks a little bit more clear, right? We've got that low formed on 8th of March, taking out those sell stops. So now we immediately turn into where do we want to pair up those sell stops, right? We want to pair them up with the buy stops on the high of the range. Now why was this a high probability smart money reversal on that monthly time frame, right? Think back about those bonds, right? the triad, the SMT that happened on those bonds. You can see this high got rated on this bond, and then on this one we did not rate the high over here. So that makes it for a high probable smart money reversal in a key level. So we're diving in a little bit lower, right? We're going from monthly into 4-hour continuation purges. So what does that look like? We've got the monthly low sell stops being taken out, and then we want to aim for that monthly high where the buy stops are resting. We've got a break of structure over here, right? And then a continuation purge down here. So we're taking out a short-term low, purging the low, and then we want to look for continuation up higher. So again, what are we going to be looking for afterwards? We're going to be looking for a change into the state of delivery on the 4-hour or the 1-hour, and or we're going to be looking for a 50 to 62% retracement level. So what does this look like? If after we had the purge, we have a new range formed as well, right? So we can put our Fibonacci on here, and we're going to be looking for the 50 to 62% retracement level where we can take entry from. Again, we have a continuation purge here as well, right? The 4-hour lows get rated, and it happens the same over here, right? Short-term low rates those low, which is a purge for continuation up higher, hitting this breaker as well, right? So it happens in a key level. That is important. So let's go back again. What happens down here, right? So we're waiting for a monthly swing low to form, right? Second candle closes inside, and we're going to be looking out also for that 4-hour change in the state of delivery order block. This is where the highest probability order block forms. Alright, so you can see that the order block is being used perfectly, and then a continuation purge happens down here. Same thing over here, right? Short-term low gets rated, so we can count that as a continuation purge. Push up again and again, breaker block up here, and then the continuation purge happens inside of this breaker below an old low for continuation up higher. So on the monthly time frame, sell stops are being accumulated down here, right? And we want to pair it up with the buy stops resting above that range high. So we're zooming in a little bit further, like the 1-hour chart over here, and we're zooming in on that 4-hour continuation purge, right? So we had that 4-hour order block over here, right? A change in the state of delivery. Now we had that 4-hour continuation purge, so we purged the low down here. Then what forms? A high probability order block, right? Because it is a purge of a low, and then we can see a push up above it, and now we've got that 50% to 62% retracement level is also a POI where you can take longs from. Right, so now we'll talk about the weekly swing model. So we're going to be looking for the 1-hour SMT and or continuation purges. So over here we've got a higher time frame chart of AUD CAD. It's a weekly chart. As always, start out with mapping out discount and premium levels. We've got a premium order block over here, which is a higher time frame key level, and now we're going to be focusing on that swing high again, right? We want that second candle to close inside of the range. So how does that look like? We've got this candle over here, right? Range high gets rated, and then the second candle closes inside. So we always focus on the third candle or the fourth candle if the third candle did not take out the sell stops yet, right? So we're going to be focusing on that third candle from the swing high. So if we zoom in, we're going to go to the 1-hour chart, right? We're going from weekly to 1-hour continuation purges. Again, it is a market maker model, those swing points, right? And we wait for that second candle to close inside the range, so we know we had a smart money reversal already. So we can trade the redistribution or the reaccumulation phases on what side of the curve you are on. So we're on the sell side of the curve, obviously. This is a bearish example. We hit that high time frame key level, right? That weekly order block. Buy stops have been purged, so we're focusing on the third candle of the weekly swing. We can see there's a market maker sell model going on over here. We'll be looking for SMT, that is key, and 1-hour continuation purges, right? So we have SMT on these highs over here, then price trades up, and then we can see over here we take out a swing high, a short-term high here, and it purges the high and then declines already. And we can see the same thing happening over here. We have a short-term high here, then price wicks above it and then starts to decline afterwards. And also think about this purge, right? Think about the order pairing video. We have a rejection of the lows, right, and not an energetic close above it. So that's an indication that we're still on the right side of the curve. So zoom in a little bit more, right? Again, we wait for that 1 hour SMT to form, and then we're going to be looking for 1 hour continuation purges into the 50 or 62% retracement level. So we've got that happening over here, right? Continuation purge into premium, drops down lower, again another range formed back into the 50 to 62% retracement level, and same thing happens over here. Continuation purge above an old high, then price trades back in that retracement level, and you can see it's actually a little bit of a consolidation, but that's not a bad thing if you're on sell side of the curve, because most likely it will continue down, expanding lower, because there is no reversal from a consolidation. If you are on the sell side of the curve, right, you will not see a reversal once it starts to consolidate. So if we dive in a little bit deeper, right, we've got a 15-minute chart from AUD CAD. So we focused on that 1 hour continuation purge, and then we can look for that 15-minute change in the state of delivery order block. So over here we rate the buy stops, right, accumulating buy stops, and now we want to pair those up with sell stops on the lower part of the range. Then we wait for a change in the state of delivery. So we wait for that up close candle to form and trade it below. So now we have a bearish order block. You can dive in even deeper over here. We have the 15-minute chart, right, 1 hour continuation purge, another one up close candle over here, which is a bearish order block, 15-minute change in the state of delivery order block, right, price comes back into that order block, into premium above the 50% retracement level, and then continues down lower. You can see the same thing happening over here. We have a set of up close candles here in premium, price wicks into it and then continues down lower all the way down to the sell side. Right, so let's go to the next swing model, which is the daily swing model, and we're going to be looking for 15-minute SMT and or continuation purges. So the weekly highs and lows will form with a daily swing model, and 70% of the time the daily swing model will form on a Monday, Tuesday or a Wednesday. So we got a daily chart over here, GBP CAD. Again, as always, map out your premium and discount, very important. Discount over here, premium over here, and then look for a high time frame key level. We've got that fair value gap over here in premium, and we have SMT making it higher probability, right? That SMT is very important. I'm going to be focusing on the swing. So what happens first? We need the candle number 1. We need those buy stops rated, right? And then the second candle, I will keep repeating it, has to close inside of the range. That is important. And then we're going to be aiming for the sell stops on the range low of that candle from that swing high point. So that's where the market maker model will form. Right, so let's dive into the 50-minute time frame, right? Over here, buy side of the curve, buy stops rated in a higher time frame key level, and then we'll go into sell side of the curve, right? So we have a market maker sell model going on. Again, we want to wait for the second candle to close inside of the range, right, which is this area over here, and then we're going to be focusing on the third candle, taking out those buys, taking out those sell stops. So SMT first and foremost important, right? We're going to be scouting for that. We've got SMT on this high from the second day, and then we're going to look for continuation purges. So we have a rate on a high here, rates on the high here, and another rate here. Put a little bit more lipstick on the chart, right? We want to be waiting for that change in the state of delivery order block, which is a high probability order block. So buy stops rated, again SMT formed within the range, then closure below those up close candles which rated the highs, causing a change in the state of delivery, and we want to see price retrace back into premium for continuation lower. So now we see price trade lower and lower and lower. Another 15-minute continuation purge, right? We take out a swing high here, then declining further. So now essentially we're forming a new dealing range, and we want to wait for again price coming back into premium and then declining. So over here we have another 15-minute continuation purge, right? And then we want to be waiting for a closure below that up close candle, right? That is the high probability change in the state of delivery order block on this 15-minute time frame. As you can see, price comes back into it and then declines, and one more time comes back into premium and then goes for the sell stops. So let's zoom in a little bit more on that little piece of price action where the change in the stated delivery order block formed. This was the order block on the 15-minute, right? And now we're on a 5-minute chart. So let's see what it looks like. So we trade out the buy stops, right? Form a new range, and retracement back into premium is important, and we hit that 15-minute order block. And we can see price decline afterwards. Now the SMT over here, also important, makes this a strong high, right? Because look at the market structure. We've got a short-term high and then an intermediate term high formed over here, as well as one over here, because price drops down lower and forms another short-term high here, back into OTE levels, right? Back into the retracement levels, and then declines down lower. So another example here on the 5-minute, right? 15-minute takes out that high, and then again we want to be waiting for that retracement back into premium, and you can see those nice equal lows down here as well, right? So that should instantly spark your interest for more shorts, because they're engineering sell side liquidity over here, and you want to be targeting that and only sell in premium. That is very important. Got another example over here, right? 15-minute continuation purge. The same thing over and over and over again. Price rates those buy stops on the 15-minute, forming a change in the stated delivery order block here as well. Price declines, and now we want to map out our premium and discount with this OTE levels, right? And then we will want to be targeting that range low. So price comes back into premium over here. It went very deep into premium, but it's still respecting that order block that formed over here, right? So that is the most important part. That's why you should always put your stop loss above the order block or the swing high point, and then it declines down lower. But there was another opportunity, because price formed another range, right? Because even though we did not take out this high, we took out these highs over here, and then we took out these lows down here, right? So we're essentially forming a new dealing range once price forms this leg down. Then you can put on your Fibonacci tool, right? And then we'll want to be selling back once we hit premium again. And you can see price comes back into premium, hangs around a little bit, and then starts to decline, and eventually takes out this range low, and we want to be targeting eventually that range low on the daily candle. And the last opportunity over here, right? We've got another purge on these highs over here, so forming a new dealing range after we took out sell side liquidity, and every time price comes back into premium and wants to sell off from there. So always wait for that premium to get hit if you want to be a seller. Right, so lastly, let's talk about intraday trading. The classic sell or buy day is day number 3 and or day number 4 in the daily swing point model. So on this we're going to be focusing session highs to lows or lows to highs. We're going to be focusing on 4-hour previous candle runs, and we're going to be using 5-minute SMT or continuation purges after either one is swept. So over here we've got a depiction of a open low high close candle and an open high low close candle, and we're going to be focusing on that classic candle, right? A daily classic candle. So we have a classic buy day candle over here, taking out a previous session low and then expanding up higher. And for a classic sell day we've got a bearish candle, which is an open high low close, right? And we're taking out a previous session high with that candle. A classic buy and a classic sell day are more likely to form a day with a high impact news event. So day 2 that takes the high or low in a swing model is also likely to have high impact news as its manipulation. So where do we look for entries intraday? As always, map out your New York midnight opening price, right? And above midnight opening price when bearish, and a close proximity entry, and we're going to be talking about that a little bit more in the next slide. And if we are bullish, below midnight open, right, and a close proximity entry. Now what is a close proximity entry? When bearish, take the opening price to the high of the day and then extend that down below midnight open and use one standard deviation of this. So over here we've got a market maker sell model for GBP CAD 15-minute time frame, right? All the things outlined earlier as well. Higher time frame key level, right? Buy stops ran, and now we're going to be focusing on a previous session high or previous session low rate, and then we're going to be talking about the close proximity entry. So what we can do is after we trade higher into that previous session high, and we expect this to be the high of the day of a classic sell day. So how do we map out that deviation, right? We want to mark out our daily opening price, and if we expect this to be the high of the day in a classic sell day, we want to use this range low until the high of the day that has been formed, and we're going to be using this as one standard deviation, right? So what does that look like? We've got another box down here, right? Shorts within this range, and below this range we don't look for shorts anymore because that is lower probability. We want to be in close proximity. That's why it's called a proximity entry. Now, where do the opportunities lie if you want to short this, right? We're already expecting this to be high of the day in a classic sell day, so we're going to be looking for up close candle, resisting price lower, right, and continuation purges where you can take shorts from. So this one is still in the box here, and that's a continuation purge into the lows. Now what happens on the third day, right? We've got a previous session high, which is late New York over here, and that gets rated Asia session high rather, and then we have that close proximity again, right? We've got range high into here, and then extended one deviation below us, and then in this area, this proximity, we can start to look for shorts, right? So over here we've got a fair value gap formed. This is where you could take an entry, and then we have that continuation purge here on the 15-minute, dropping down lower, and price comes back into that proximity, right? That first deviation over here, back into premium, and then from there on you can still short it. So over here we've got a Euro USD daily chart. Again, think about all the previous lessons, right? We have the higher time frame buys, we've got the order flow, and now also the order pairing, very important with the swing model, right? We've got a swing low formed over here, so sell stops rated. So now we instantly know we have a range low and a range high, which means we want to pair up the sell stops with the buy stops, right? And we focus on day number 3, and just repeating again, day number 2 needs to close within the range. Now we zoom in on the 15-minute chart, right? Market maker buy model, because swing points are market maker models and vice versa. We've got second day forming that smart money reversal. The wick closed inside, so that is good. And we've got sell stops rated, right? So we're accumulating sell stops, and we want to go for those buy stops up here, completing that market maker buy model. So what does that look like on a classic buy day, right? We've got a open, a low, high, close candle. We want to rate a previous session low on the third day. So what are we going to be looking for? We've got Asia session, right? Previous session, Asia session low. We rate that low, and then we're going to be looking for M5 continuation purchase and SMT. Map out your daily opening price as always, and we want to trade below that first, right? And think about how to outline that proximity entry as well. Zooming in a little bit more, right? 5-minute time frame. You can see it a little bit clearer, more zoomed in over here. Previous session low rate, SMT on the lows has been formed, continuation purchase happening over here. So now where is the close proximity? Again, we're starting from daily opening, right, and into the low of the day, which we're gonna outline in one standard deviation, and that's only where you should be looking for entries. So that box over here, this is the entire range where you want to be looking for longs, and you can actually see that after we had a continuation purge down here, we have a fair value gap formed, right, and then we can long from there, another continuation purge here. So that is beautiful to see. Now let's outline that change in the state of delivery order block. Same chart, Asia session low rate, right, and then we can see price trading up higher, and then forming that change in the state of delivery order block. We had SMT on this lows as well, right, so you can see price comes back in that order block. It goes pretty deep in the range, but still respects it, so it's still valid, and then we go into the retracement, right, and then we're gonna go for those buy stops. Now if you didn't manage to get in late during London, right, there's always an opportunity in New York session. So range low to range high, right, and think about the order pairing, right? We've got a range low as well above that key level. We've seen this example before, and this is why it's so powerful. You want to pair up those sell stops, right, and pair them up with the buy stops, and we can see that over here we dip back into that fair value gap, into the retracement level, and then this classic buy day should expand higher and going for that buy side liquidity.